Thank you, Mr. Chairman, and thank you, Commissioner, for joining us. The President's healthcare law resulted in the largest expansion of the IRS's role in history, burdening the agency with enforcement of 47 new provisions totaling about $1 trillion in new taxes. One of the IRS's new duties under the law will be verifying income information to determine how much an individual will receive in the premium tax credit subsidies.
Yes.
And back last fall, the Treasury Inspector General for Tax Administration released a report detailing improvements needed in order to ensure the IRS could adequately strengthen the premium tax project that is a part of the law. These, as you well know, these premiums are taxpayer subsidies that are available to enrollees in the form of refundable tax credits. The CBO's annual budget and economic outlook, which was released just yesterday, estimates that 80% of folks enrolling over the healthcare exchange will qualify for and use one of these premium tax credits. The CBO estimates that the Treasury will be giving out nearly $900 billion over the next 10 years in healthcare premium tax credits. Now then, even the most honest of taxpayers can expect to face difficulties with the IRS over this subsidy. Any number of normal life events, as you just talked about with the EITC, such as marriage or a job promotion, could inadvertently lead to an individual being paid too large a premium tax credit, and it will be up to the IRS to recover that money. However, it doesn't even begin to touch on the difficulty the IRS will face when confronting folks who might commit outright tax fraud. As I just noted, these are refundable tax credits, which are particularly attractive to those who are wishing to commit fraud. We're talking about millions of individual tax returns and a pot of nearly $900 billion. So that brings me to my primary concern. Beginning on page 14 of the report, the Inspector General raises concerns over the IRS's lack of fraud mitigation strategy to guide the system's development as it relates to the premium tax credits. It notes that there is no overarching fraud mitigation strategy and concludes by saying this, and I quote, "The IRS's existing fraud detection system may not be capable of identifying ACA refund fraud or schemes prior to the issuance of tax refund returns," end quote. Now, I see that the IRS agreed with the Inspector General's recommendations to develop fraud mitigation systems. So can you just give our committee an update of what exactly the IRS is doing in its effort and how successful we can expect that to be?
I'm happy to. I mean, we could have a long hearing on where we are in that subject, but in a short answer, let me say, first of all, the IRS role in the front end of the program and its rollout went very well. So with all of the other difficulties, it is important to note that we were able to serve the income verification role in the fall and continue to do that effectively. We are concerned that people's life experiences will change. They are making determinations are made about what the premium tax credit in advance should be based on an estimate by the individual of what they will earn in 2014. And as we all know, when we do withholding determinations for W-2 purposes or otherwise, you make an estimate, but it never is quite exactly right. So there will be reconciliations of those tax credits at the back end, and that's a major challenge for us. But in terms of the fraud potential, it's important to understand, as I think this committee does more than most, that the advanced premium tax credits don't go to the individual. They go to the insurance company. So the opportunity for fraud at the front end in terms of claiming the credit with third parties claiming it are limited to what the normal identity theft and refund fraud claims are. So the money is going to an insurance company, so unless you have a relative in an insurance company you'd like to help out by getting them more money, there's no incentive at the front end to have an increased payment. At the back end, when you come in and you actually reconcile what you actually thought you would earn in 2014 with what you did earn and then complete a calculation as to what your premium tax credit ought to be, to the extent that either you didn't get a credit or you got too small a credit and you are owed a refund, that will be based on an insurance policy that you actually own. You cannot fabricate that. We will actually on a regular basis be getting from it, and we are now, getting from insurers the enrollees, who's on their policies, who's engaged in them, so that your chances at the back end, even if you get a refund, you can't get that free and clear. You will have to had a policy that you paid a premium on. So notwithstanding all that, we do need to make sure that people are reporting their income correctly, because the way you could increase or decrease, you may have a policy if you underreport your income and therefore say you have right to a bigger premium, that would be a refund fraud if you're doing it willingly. And we are developing screens with that. I would note with the Inspector General report, that was a report requested by our IT people who are working in partnership with the Inspector General, to have the Inspector General come in at a regular basis and review the status of the progress. And that's why it's a productive working relationship. We are confident that, based to some extent on our success at the front end rollout, to some extent on the success we've had in other IT initiatives in the last 3 or 4 years, that we're going to be successfully able to execute our responsibilities at the back end. But it comes at a cost, and that cost is under the resources. It's an additional burden that we're bearing. We expect it's going to cost $300 to $400 million, and it's going to come out of other IRS activities because no funding has been provided in our budget.